Hello everyone, and welcome back to Chapter 32. The topic of this chapter is going to be trading routine, specifically my own trading routine. In this video, I'll be sharing with you all the details regarding it, what's included, the step-by-step process I follow, and how I approach that trading routine. Everything will be covered in this chapter. By the end of it, you'll know exactly how I approach my trading day, what kind of trading routine I have, and if you don't already have one, you'll be able to use mine as a base. You can copy it and make it your own by adding your personal touch and adjusting it to fit your trading style and mindset. So let's get into the chapter. First of all, before we do anything else, let's discuss what type of trader I am. Personally, I've clearly defined this for myself, and you need to define it for yourself too. You should document all of your thoughts in detail. The reason I did this is because this kind of document and this level of detailed analysis of my trading style helps me a lot in making my approach mechanical and objective. This way, I know exactly what my objective is and what my goal as a trader should be. As many of you already know, I'm a day trader or an intraday trader. Both are interchangeable terms. My objective as a day trader is to exploit and position myself within the range expansion of the daily candle. What this means is that my goal is first to determine the most probable direction of the current daily candle, and then to frame a trade around that direction in order to position myself within that range expansion. That's the type of trader I am. Second of all, quality over quantity. The most important thing for me as a trader is quality rather than quantity. That's the guiding principle for me as a day trader. If I had to define myself as a trader in one concept, it would be quality and high probability. I've already explained the thought process behind this mindset and approach in the introduction video, so if you haven't watched it yet, I suggest you do. Regarding my average trades per week, it's around 2 to 3 trades, roughly 2.5 on average. My key timeframes are the 4-hour and the 15-minute charts. I use the 4-hour timeframe for building market context, which means identifying and selecting the correct candle ranges and matching them with necessary prerequisites like higher timeframe key levels, order flow, and so on. Alongside that, I use the 15-minute timeframe for framing entries and setting up trades. That doesn't mean those are the only 2 timeframes I use. I also check the daily, weekly, and monthly timeframes, but the 4-hour and 15-minute take precedence. These 2 are my main priority. One is used to build context, and the other to frame a setup or entry model around that context. Moving on, daily market monitoring. This means I analyze the market and monitor charts every single day of the week. However, that does not mean I take trades every day. This is a crucial point. I analyze every day, but I only execute when I find a setup that meets all of my criteria. Setups that meet the minimum requirements for a trade to be valid or even worth taking for me. As for Forex pairs, I specifically and exclusively trade Euro versus USD. Along with that, I monitor GBP USD, also known as the cable, and the DXY US dollar index for non-symmetrical price action or SMT, smart money technique divergences. The main pair I trade is EUR/USD, and I check DXY and GBP/USD to see if there are any major SMT divergences or other non-symmetrical price conditions. In the context of this group or course, of course, I'll also be analyzing another pair for you, which can be decided through a vote. If you're asking for my suggestion, NQ, Nasdaq Futures, would be a good option. I also do trade Bitcoin as well. And last but not least, I specifically use an order block conformational entry model for my trade setups. That particular model will also be the primary focus in this group. All of my trades will be framed around candle ranges, and the entry model will be an order block confirmation. So that's my introduction as a trader. Now you know everything about how I approach the market. Moving on, here at this slide, let's discuss one of the most important aspects of our trading routine. I'll be showing you exactly what my daily trading routine looks like and what a trading routine needs in order to be considered complete and not obsolete. The 3 main components of a trading routine are price action analysis, execution, and journaling. These are the key steps, or components, that make up a daily trading routine. Each one of them depends on the others, meaning if even one is missing, the system becomes obsolete and redundant. For instance, execution is only feasible if you've properly done your price action analysis. Without that, you're essentially just gambling, and it can't truly be considered execution. Similarly, without execution, there's nothing to journal. And without journaling in the first place, you can't improve your system enough to develop a proper, feasible, consistent and executable trading edge. Now, I could go into much more detail on that, but you get the idea. Let's now discuss each of these components in detail, and make sure to take notes along the way. First of all, we've got pre-session analysis. This is the first and most fundamental component of not only a trading routine, but also a trading system. In this component, your objective is to perform or conduct a market warm-up, or a detailed analysis before your trading session begins. For example, my trading session begins with the open of the London session, so I perform my pre-session analysis before the London Open. Now you might be wondering, what do we do in this analysis? The answer is simple, but not easy. We do two things. First of all, during this pre-session analysis, our job is to determine the higher time frame directional bias, to figure out where price is likely headed, or to determine the most probable direction for price, or even to identify the draw on liquidity. You can use whichever phrase you like best. Secondly, our goal is to identify a candle range on the higher time frame, so that we can then position ourselves toward that draw on liquidity. This is the first component of a trading routine. Essentially, you perform a top-down analysis before the session begins. I'm going to be making a whole new chapter focused entirely on pre-session analysis, where I'll show you exactly how I conduct my own and what kinds of factors I look for. The next chapter will be about it. Now let's move on to the second step of my daily trading routine, which is the execution part. You see, the precision analysis helps me determine directional bias. It helps me identify draw on liquidity and select the correct key levels and candle ranges within a dealing range. However, this execution part is actually what makes the system feasible, profitable, and capable of generating money. This execution part is essentially the active component of the system. It's also the hardest part of trading because it puts immense pressure and a psychological burden on our brain and mental state. It requires a high level of discipline to avoid making emotional trading mistakes. For me, this execution phase is further divided into two steps. The first step is waiting and patience. Most of my trading time is spent monitoring the charts and waiting patiently. That waiting period involves watching for three key things to happen. First, I wait for a candle range to form near a key level. Second, I wait for that specific candle range to be purged at a key time. Third, I wait for a confirmational order block entry to form after the candle range has been purged at that key time. During this entire waiting period, I make sure to maintain psychological discipline and not let emotions interfere with my decision-making. I actively avoid fear of missing out, greed and fear itself, all of which can easily lead to impulsive trades. At the same time, I make sure not to force any unnecessary trades or share any ideas that don't meet my minimum criteria. This is the whole waiting phase of my execution process. Once all of that is done correctly, that's when the actual execution happens. My execution takes place when I've waited patiently for a candle range to not only be formed, but also purged at a key time. After that, I wait for a lower time frame confirmational entry, typically in the form of an order block, to be formed. Once these conditions are met, I can execute my trade with a mechanical approach. I make sure to have a precise entry point, a clearly defined and objective stop loss, and a calculated take-profit level. After executing the trade, I manage it as needed. This entire execution component of my trading routine involves two steps: waiting and then executing. Most of my trading time is spent waiting, and a smaller portion is spent executing. Now moving on, last but not least, the third main component of my trading routine is journaling. This is the third core element of my system and trading process, and it's exactly where most of my behind-the-scenes work happens. Right now, journaling isn't just about recording trades. It's a critical and important process for me, where I do three things. I document my trades and take detailed notes on them. I conduct performance reviews on those trades over the weekend to evaluate both my model's performance and my own execution throughout the week, and then I calculate my execution consistency ratio based on the journal data. This helps me assess how well I performed, whether I made any mistakes, and how I can improve my consistency and correct any errors I made in my execution. Currently, my journaling consists of two main parts. First is trade journaling, which I do on a daily basis. Second is the performance review, which is done weekly. Let's start with the first part, trade journaling, done every day. This is divided into two sessions, the morning journal and the end-of-day journal. During the morning journal, I record my top-down pre-session analysis and take deep notes. I write down everything related to the directional bias, the market context, everything. I take notes on key observations from the market during my pre-session analysis and journal them in my Notion workspace. The second session is the end-of-day journal. Here, I document all the trades I took throughout the day. And by that, I mean just a single trade, since that's the maximum I'm allowed to take in a single day. I log that one trade in detail, including key levels, trade execution, and other major factors and key metrics like candle ranges, when the push happened, whether it was valid or not, and so on. Along with that, I take notes on what worked and what didn't, and any patterns I noticed in my psychological state or decision-making process. That's the daily journaling part. Next is the performance review, done at the end of each week, usually on weekends. I also call this my weekend analysis. Every weekend, I conduct a detailed review of my trading decisions and overall performance throughout the week. During this process, I analyze three main things. First, I assess whether my execution was consistent with my model's performance. I do this by calculating my execution consistency ratio, ECR. I compare my model's hindsight performance, the trades that would have been considered valid according to my system's rules, with the actual trades I executed during the week. Then I evaluate whether my actual execution was aligned with what the model would have done. I check if I consistently stuck to my plan. Second, I review whether I followed my trading plan correctly. And third, I look for any mistakes or inconsistencies made throughout the week that need to be corrected. This is exactly what my journaling looks like. It's high-level stuff that most people don't talk about. Most of these aspects, journaling, execution review, pre-analysis, I've developed myself through personal observation, my own study and research. The execution consistency ratio I mentioned is something I created myself. I even dedicated a full chapter to it inside CPI, and there's a complete formula for it that you can use to calculate your own ECR. But the point is, I developed it on my own. And this is how you get to a position where you make a lot of money. Not by just copying others, but by actually studying the markets. Not just the markets, but the management side of trading as well. This is how you get to the point where I am. These were the three components of my trading routine: pre-session analysis, execution, and trade journaling.
Would you like to earn up to $10,000 just from sign-up bonuses? How about copy trading alongside professional traders like myself and these experts right here? With ByteFi, it's easier than ever. That's not all, there's no KYC required for all regional users. Plus, you'll enjoy a lifelong 20% cashback on every trade you make. And when you sign up, you'll also get a 10% deposit bonus. This totals 30% of your total trading budget. The link is in the description below.